Too familiar with.
LLCs are S-corps. S-corp is a tax status. It is not an entity. So you can't just form an S-corp. It doesn't exist in terms of entity statuses.
Oh,
So when I say S-corp, it's an LLC that is taxed like an S-corp. Most LLCs by default become disregarded and just become taxed as sole proprietors. So you finally started your own business. Invest for the long term, and I'll show you exactly how. Be good to future you. What is going on? I get two dudes to talk to today. Tell me about what's going on and what questions I can answer for you.
This is all Darren's platform. I'm just here to kind of learn from it.
really, man?
Sweet.
This is how. Well, I saw you on TikTok.
Awesome.
Here we are, which is awesome. And so one of the things, so that's my husband, Brian. I'm Darren. It's nice to meet you. We live
Likewise.
in Atlanta, just moved from San Francisco to Atlanta in September
Cool.
last year. We're trying to improve our financial literacy.
Okay.
Right. And so what we're doing now is moving into doing some investing. Real estate investing is really one that we're looking at. And so I love just kind of watching your channel for all the different kind of advice that you have for that. And it's like, oh, wow, that's exactly kind of what we needed to kind of look at to help us out on ways to kind of manage it. I'm really trying to design my business infrastructure, or really my ecosystem that is set up for asset management and asset ownership, both of future companies as well as future investments. Make sense?
Oh, yes. The whole asset protection side and entity structure setup. Got it.
Because it's a twofold purpose, right? Setting up your ecosystem, your business ecosystem in a way that protects you and your assets and allows you to be able to easily transfer amongst your family or whoever kind of you need it to be part of. And then number two is setting it up for the best taxation you can get.
Yep. Protection and taxation.
That makes sense?
Yep. So where are you at right now?
Just in the conversations part, first thing is set up a living trust and let the living trust be the owner of everything. And then that Brian and I would be kind of the, what do you call
the executors?
Yeah.
Guarantors
of that trust.
Or custodians?
Yeah. Custodians, right. Because then nobody knows, they cannot find your name. You can be completely hidden. So that way the trust is the only thing that's going to be on any documents of who owns anything, right? Then the next is setting up the management company, which will be 100% owned by this trust. And then that management company then will own, each of the individual investment properties. I also have my LLC right now for my consulting business, which I need to domesticate from California to Georgia.
Okay.
And so in there is what I'd also want to attach kind of to this management company as well. So that way then this management company, has that. And then from a taxation purposes, I guess they pay a management fee in a way, and then that kind of helps reduce taxes. So that's kind of where I'm at in kind of feedback of what I was looking for.
Cool. What is your question?
How is that structured? Is that a good structure?
I see what you're saying. Well,
I mean,
it depends on it all depends on what you want to accomplish, really. And so some people want to get into real estate. Some people want to build businesses. Some people want to work off of royalty deals. Some people don't even ever plan on building a business that they want to sell. And so it kind of changes the landscape as far as what you can put into place. You can go as complicated and as gnarly as you want, or you can make it really simple. But it all depends on what you want to accomplish. And it sounds like you want to accomplish protecting your assets and lowering your taxation. Really those two things. And I kind of see the asset protection side is a side where you can start putting in layer upon layer upon layer, but you start from the one point of having an LLC. I mean, that's really it. That's like the first starting place, or from a trust from the top down, like you said. And the entity and asset protection side is layers and layers, adding it on. It's a little bit easier, in my opinion, adding the entities. And then you get into the taxation side, because just forming entities doesn't change the way that you're taxed. You have to change your election your status and the way the money flows. So your head's in the right spot as far as the management fees go, for sure.
Yeah. So setting up that, do you set the management company as a C-corp or is it an S-corp? Because I know you don't want to do an LLC, because the challenge I'm having right now with my LLC, I should do it as S-corp, is, again, number one, in California, you have the automatic, now it's $900 a year LLC tax, plus you have your self-employment tax. And I think that's where you were talking about, if you have an S-corp, right, then you pay yourself a salary. From a taxation perspective, how that is, then you don't have to pay, the self-employment tax. And then you can
let's talk about that real quick,
owner
because
withdrawals. Yeah, that's the part I'm not.
LLCs are S-corps. S-corp is a tax status. It is not an entity. So you can't just form an S-corp. It doesn't exist in terms of entity statuses.
Oh.
So when I say S-corp, it's an LLC that is taxed like an S-corp. Most LLCs by default become disregarded and just become taxed as sole proprietors, which is probably what your LLC, your consulting company, is taxed as right now.
Correct. Can you talk about disregarded? That's the part.
Yeah, of course.
Sure.
So a disregarded entity, when you form an LLC, it defaults to that disregarded status, right? Because you haven't chosen a tax status. And so it just becomes an entity that you own that generates money, and that money gets reported on your Schedule C. Mm-hmm. So that's kind of the basis of understanding, right? Most LLCs are that way. Now, what you can do is LLCs, because they're such a unique entity, you can change them up. They don't have to be disregarded or taxed as a sole proprietor. You can have them taxed as an S-corp. You can have them taxed as a C-corp, just like Amazon. You can have them taxed as a partnership even. And you can start getting deep into the weeds there. But the fact of the matter is that LLCs offer you the most protection because they have the greatest benefits for someone like you. Now, I want to touch on one other entity that we haven't brought up yet, and that's a corporation. No S or C attached to it, just a corporation. And corporations are entities that people form when they plan on raising multiple rounds of funding, or they want to start giving out shares of stock. Okay, so a lot of big tech companies will choose to form a corporation so that they can create 10 million shares of stock, right? Something that LLCs can't do. Mm-hmm. And then they will have it taxed as a C corporation so that they can, pay a flat 21% tax and not have it be a pass-through entity. So big businesses do corporation and C corps. And people like us, Darren, who are building businesses and worried about protecting our assets and our tax statuses, we're going to go a little bit of a different route. Okay, and we're going to be forming LLCs and either having them be disregarded or having them taxed as S corps. That's going to be like your main ammunition there. Mm-hmm. So you're on the right path, dude. You're crushing it. You're asking the right questions and you're doing a great job. And I think that's so cool. So can I share with you how my companies are set up so that you can have a better understanding? Mm-hmm. All right. So I have an LLC that I own, and I have it taxed as an S corporation, and it's my holding company, right? We've heard you bring that up. And my holding company catches all the money for all of my companies and all of the business that comes in. Because when you have an S-corp, it gives you the ability to split the money that you make, or when you pay yourself, it gives you the ability to split it into two separate categories: earned income and ordinary income. Now, when you're just a sole proprietor, everything is earned income. So you're paying full taxes on all the money. But S-corps allow you to split it, right? So our salary, we have to take, the IRS says you have to take a reasonable salary, right, when you have an S-corp. And all that, you have to pay full taxes on it. There's no way around it. But the other chunk of the income, you take in the form of distributions. And those distributions are not subject to the additional 15% self-employment tax. So that's how changing our LLC into an S-corp saves us money in taxes. So all of my companies that I've partnered, or all of my companies that I have, product companies, service companies, whatever the case may be, they contract, and I literally put management agreements in place. Like I wrote out a management agreement and I signed both sides of it. And they pay my S-corp management fees every month. And that's where all the money's collected. And then it gets split up into my salary and my distributions. Makes it easy for accounting, makes it easier to save a little money on taxes.
Right.
Most definitely.
So that's actually a question that I have, right? Is you just have one company then, correct? Or do you have one company then creates an LLC under it
I have multiple
for
LLCs
each?
that are owned and managed by my S-corp.
Okay.
The
So that
reason
was kind of the
why,
design is, yeah.
yeah,
Or you do DBAs, right? You have one company that's just doing DBAs as the 15 different companies. So that was
yes,
the
yes.
point is, does it make sense just to have one company and then just have multiple DBAs, right? And all the funds come in one, or maybe from an asset protection, it's better if you do it this way, or a
Mhm.
taxation. So what would be the difference between those two strategies?
I would go the DBA route and have one LLC and do DBAs if it was going to be simple. If you were going to just start different ventures and you, or maybe your husband, are the maximum, the only people involved in these projects.
It
Because
would
when
be
you
like,
start doing DBAs and you start bringing in other parties, it increases your liability. So if you're going to
Mm,
partner with anybody at all outside of you two guys right here, then I want you to create a completely new LLC. And I want your S corp or your trust, preferably your S corp owned by your trust, is a partner in that new LLC with whoever else you're doing business with. One last thing is just you're liable for your partner's actions in business activities. That's why you want your S corp to be a partner and not yourself, because it puts a degree of separation in between the two. In case some big fuck up happens, you're not going to be personally liable.
okay.
is it hard to
Taken.
create an LLC? Because what our focus is right now, he's already had his own LLC. I had no experience in doing this. I don't know, but one thing that we want to do is potentially, focus a lot into real estate and to either flip them or convert them into properties where it will be Airbnb products. So, like as of right now, I'm in Detroit, Michigan, and I'm looking
Mhm.
at real estate properties because I'm seeing, or multi units, because I'm seeing that the Airbnb is doing very, very well here.
Mhm.
And so, from a real estate aspect, great. But then from a design and staging, which I like to do a lot since I have a hotel background, um, I wanted to create more of an LLC that is focusing on that type of, industry, staging or
Good.
consulting of that nature. Is it hard to do something like that?
The hardest part is finding out what the actual activities for the business are going to be. And you've already solved that problem, Brian. You're going to be a staging company. Very, very easy. Staging, consulting, real estate, consulting, whatever the case may be. And forming the LLC is the easy part. Is what you just said is the hard part. So you'll literally just go to your state and file your articles of organization
Yeah.
with your Secretary of State, and boom, you have an LLC. It's in. It's done.
It's that quick. And and then you get your tax ID.
Yep.
So those are the easy ones,
Yep.
right? The important thing is, though, for your LLCs is learning how to create your operating agreements.
Mhm.
So, because when you do it on your own, that's all you do is you just file it, but you have to create your operating agreement. So I know, like, sometimes I'll use LegalZoom, which is great, and then they'll also create my operating agreements for me.
Mhm.
Of course, those are kind of like standard languages,
Mhm.
but just making sure that those are done kind of nicely. I know for when I had my S corp, it was different because now I had to do monthly management meetings, and you have to document,
Yes. Corporate minutes.
all of those agreements in the minutes and stuff. And I remember having a tool that did that for you and
Mhm.
kind of generated that, which I knew that was different. I didn't have to do that for just a sole proprietor LLC.
Mm-mm. Yep, only with the S corp. So when you form the S corp, like, okay, so you have LLC sole prop on one hand, and then say you're gonna move up to LLC tax as an S corp. So there's
Yeah.
like 5 things that need to be in place in order to do that effectively. And
Yeah.
one is payroll software, because you need to be taking a reasonable salary, and you need a payroll software to make it happen. You need a bookkeeper so that you continue to do your job, and a bookkeeper can handle your books for you. A couple $100 a month, not the
Yeah.
worst. Additional filings every year. So your CPA will have to file some additional things for you. And then you'll have to change the tax status of your LLC by forming the S election form, which you've done before. And then the last thing is just the minutes, keeping track of following the laws, basically. Playing ball and respecting your company and treating it like a company instead of something else.
Obviously, you probably hear this a lot. I want to get to the point where I have zero taxes like Amazon,
Mhm.
right? those are the tricks of the trade that I don't know. And again, I hate bookkeeping and stuff. This is where Brian has actually helped me. I do have QuickBooks Online.
Mm-hmm.
That's the system that we use.
Mm-hmm.
The one thing that I have not done is actually put myself on payroll.
Mm-hmm.
And so that's what's happening is I'm getting slammed, obviously with taxes, because it's, well, that I'm automatically getting the double tax, right? For the income and for
Self-employment tax?
Self-employment, yeah.
Yeah.
So that's my estimate is you got to put yourself. So that's one of the things I want to do, like immediately, kind of this year. What I'm trying to do is set the companies up first, and then do that, and then set up the bookkeeping. That's the other thing is, we did research online, and what are all the tax deductible kind of chart of accounts that we should set up, and so that's how I set it up. So that way now all of my expenses I'm mapping to one of those kinds of chart of accounts.
Good.
But it's really, I think more than anything is understanding the best tax strategies when it comes to the money coming in. So I don't have a problem bringing in the money. It's being taxed the hell out of it. So yeah. I'm not doing something right, either the way I categorize it in my chart of accounts, or how I'm filing, or it could be like this, how I set up my companies to avoid the additional taxes. That's the part that I need help designing on a tax.
Yep. So Steven is my CPA, and that's his specialty. He goes in and 50% of your tax planning, your whole strategy is going to be done in the initial planning stages of setting up your entity structures, your company structures. That's half of it. And so what I did is I sat down with somebody like Steven, someone who knows how to set up these companies for maximum tax benefits. And then he asked me questions for 2 days, dude. What do you want to do? What do you want to accomplish? What kind of businesses are you starting? Where do you see yourself? What are you and your wife doing? How much money do you plan on making? What are your goals? What are your retirement accounts like? What are your kids doing? All of it.
Right.
All of it. And then he goes and he sits together with his team and says, okay, you need an LLC tax as an S-corp right here. You need a C-corp off on the side. You need these LLCs for your properties. You need to have these disregarded LLCs underneath with a management fee to these. And then we're going to set up a trust here to cap it all off. And this is how you're going to do it. And as you grow, start filling in the blank spots and start building out this structure that we've outlined for you.
Yes.
And I said, perfect. Thanks, dude. And I paid him a couple $1,000, and it saved me so much more, tenfold.
Yep.
Because you are paying the most amount of taxes of anyone in the United States. It can be as high as 60%.
Well, more because it's still in California. I haven't moved it over. In Georgia. You don't have the yearly LLC tax like you do in California.
Get it out of California, or just close it down and start a new one, dude. But yeah, domestic filing should do the trick.
So that was my thing. I didn't want to close it down because I could easily do that. But I spent a lot of time to get the credit, the business credit, because that's really where I want is for purchases now, again, to move away from my personal, and everything should be business related.
Yeah. If you've got credit, keep it.
I got my Dun & Bradstreet, and I paid for, and I did it before my previous S-corp is doing their, the credit builder program they have. It's $1,400. But it's like they expedite in getting your credit built, which is what I did. And you submit all your vendor information. So that's what I've done. And so now I've built that credit. It's the only reason why I want to domesticate, because I don't want to lose my credit. That's a tie to my tax ID.
Now, is that doable?
Yeah, it's doable. Just domestic filing. You can just move the business over to the state you're in now, where you're doing business. Totally fine. Yeah. It should work. Yeah, I don't see any issue with that. Now, once you start making a ton of money, right? Because the way I see it is you start out as a sole proprietor with an LLC, and once you make about $50,000 in profits, then it's time to start looking at how to save more money, because it's about the money you keep, not about the money you make in the end. Yes. And so that's when you start moving to the S-corp side, when you have 50,000 in profits, because you can afford to pay the people to set it up for you. But once you start getting up into the $500,000 in profit range, Then you start putting C-corps into the mix and start taking advantage of a flat 21% tax rate. And then you use that C-corp to fund all of your ventures and pay all of your workers, all the office administration fees, things like that. And it allows you to put money into the company, have it taxed at 21%, and then use it after that for whatever you need. So there are ways to continue to lower your tax liability as you increase your income. But right now, you're exactly where you're supposed to be, Darren.
So my question to you is, because of COVID, I've been in hotels for 18 years. And so now I'm starting this business, or starting to really partner up with Darren on real estate and getting investors in for multi-units and stuff like that. And I definitely have the credit worthiness now for me to go out and buy a house if I want to. However, I don't have the income like I used to, because I'm by my, it's like I have no check. But how am I able to basically utilize the income of my husband as more of, because we were told that when we were to buy properties, the first house I should buy, the second house should be his house that he should buy, then the third house should be considered our investment property together. But if we want to start doing this, the only income I have is basically kind of being the housewife, if that makes sense. Really living off of Darren's money versus the money that I made.
Yes.
How or what do I need to do to kind of show support that I am getting money, or whatever my income will be, or whatever, to make it really look legit?
You guys file your taxes jointly or separately?
Yes.
Jointly. Okay.
Jointly.
So then both of you are viewed as one person in the eyes of the IRS. Okay. Gotcha. So in terms of, so if you're going to be filing jointly, the IRS is going to look at both of you as one entity, a couple, a family, a household. Now, when you're going to a lender, that's a different story, because they want someone to be responsible for the loan. And they don't care if it's two people or one person. What they want is ability to repay and credit worthiness, right?
Right.
So how do you get that? So there's two things you can do. You can show them your tax returns because you filed jointly. Therefore, you both made what Darren made, and Brian can be on the loan, maybe using the tax returns from both of you filing jointly. However, the way that I like to do it is by making sure that I'm on payroll with my S-corp.
Right.
So taking a reasonable salary and distributions on my K-1, those two things I can show to a lender, and they're like, okay, cool, looks good to me. Very easy.
That was the other thing we were looking at doing, is adding Brian as payroll. So putting both of us on payroll.
Yep. Now, one quick thing,
LLC.
You can't be on payroll if it's just an LLC. You cannot be on payroll if you are the owner of a LLC that's taxed as a sole prop.
Correct.
It has to be an S-corp.
Correct. So my two things is I got to domesticate and convert to an S-corp.
Yes. Nailed it.
So those are the two things. And then we can set up for both of us then kind of to be on payroll.
Yes, most definitely. Well said.
Okay.
Yeah, you guys are in the right spot. I love what you're doing. This is cool. This is exciting. You're going to be buying properties. You're going to be doing your thing. You're getting your entity set up. Yeah, well done.
Yeah. Oh, it's awesome. Yeah, it's good. Because that was my thing is really when you're adding in new properties, I know. So I'm learning how to do syndication now for properties. So we actually had one that we're looking to syndicate, right? So then there's the ownership LLC they say to create, and then there's meaning the property is the only thing in it, and then for all the members there was a separate LLC.
Yes,
that's how I was saying to set it up for
absolutely
for each property.
And property never goes in an S-corp. Never.
Yep.
Because it can't come out of an S-corp without being sold. It creates a taxable event. Really? Yeah, it's a whole big, just don't do it. I was having my tax guy explain it to me yesterday, but yeah, the gist of it is don't put properties in S-corps ever.
It should be in the individual's name.
Yeah, or you can buy it and then quit claim deed it into its own LLC. Just don't change the tax status of that LLC to the tax status of an S-corp. Just leave it as a sole proprietor or disregard it.
Yeah. Normally, like we'll usually put the address as the LLC, right?
Yeah, totally.
Like this one, Vesta Apartments LLC.
Yeah.
Or something like that. That's normally how we're doing it. Okay.
Very good.
Awesome.
Did you guys get your questions answered? Are you in the right spot?
Yeah, you did. Yeah, you helped validate.
Cool.
learning.
Yeah. Anyone can do this. It's very achievable. And I like that. I dig it.
Awesome.
Yes, this is helpful. Awesome. Thank you so much. I really appreciate it.
You're welcome, guys. Yeah, you're welcome.
Cool.
Have a wonderful day, okay?
All right. You too.
Keep me posted.
Take care.
See you later.
Yeah.